Good morning, everyone, and welcome to the Quantum Leap pre-market morning leap. Sorry. My name's Doug McKay, and I am the founder of Quantum Leap Futures. This is a subscription room. We do live trading and live analysis throughout the trading day. Each morning we come together and take a look at the market, the structure of the market, the trends, macro and micro, and then we drill down to determine where our trade levels are going to be, our targets, and our hypotheses for the day. Today is Thursday, September the 17th. It is a FOMC day, Fed day, and it's on a Thursday rather than a Wednesday, coming into quad witching. So we're at a very interesting point in terms of market. Before we get going, let me just get the legals out of the way. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades and investment decisions made. Trading futures or any instrument involves a risk loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. Past performance is not indicative of future results, and any trades that you see in here are for education purposes only. Please trade your own due diligence, your own trade plan, your own trade metrics. Okay, so it all starts off this morning at 8:30, where we had building permits, unemployment claims, current account, and housing starts. Basically, we came out pretty much as expected. Unemployment claims actually came down about 12K. And we didn't really get any type of a pop off of it. Other than that, we came out pretty much as expected. We've got the Philly Fed coming in at 10 o'clock, the natural gas at 10:30, and then of course the big economic news this afternoon will be the Fed statement and the rate and the press conference. Remember, the press conference is 30 minutes after the Fed. And that should be when the real fireworks start and the real direction of the move off of the Fed statement. So we'll get the initial market knee-jerk reaction. It'll chop around this time and then wait for the Fed conference, okay, and Yellen's answers, and then we'll probably get the real direction and the move into tomorrow and into the weekend. So each morning I like to start with a basic chart, and I start with the, sorry, I was doing some trading just beforehand, so I gotta get set up here. I like to start with the macro to micro, do the same thing every day. Just keep myself aware of where we are within the trends and how the trends are, the strengths of them, if they're being violated, challenged, and use a basic candlestick chart with a 9 EMA and a 20 SMA. I'm looking for slope and separation of the two MAs and whether or not we are challenging. You can see we've had this wonderful trend up, and last month we had our first close below the 9 and the 20, and we are currently below the 9 and the 20. We came up yesterday and tested the 20 from below, but we're currently still below it. The trend is being challenged on the monthly. On the weekly, we've got the start of this downward trend. We created a technical gap with a foo bar, Mr. Sneaky. It's a proprietary candlestick setup that I use. It is a reversal pattern. We should come up here and close the technical gap. Tech gap close is going to be around the 2,250 area. That's the CHVN in that area. But we're currently still inside the prior week, and anything can happen with Fed. We can get revalued very quickly. But the trend itself is showing indications of starting a downward push. On the daily, we had the same pattern on the daily where we had the technical gap, a foo bar, Mr. Sneaky, and we closed the technical gap, rejected the 9, and then we continued the trend down, then went sideways, and now we're we're above the 9 and the 20, so where we are starting a trend down, it was challenged, and now we have a possibility of a start of an upward trend. We do have a naked cross here. This is another proprietary study of mine. These naked crosses are never left alone. And we look at them on different time frames. We'll talk about that in just a couple minutes. But the one on the daily right now is at 1954.50. So mark that in your journal as a possible, return to the scene of the crime. Naked crosses are like naked VPOCs, naked closes. They do not tend to stay naked, and left alone. But the overall trend to the downside on the daily has been halted. Going into the intraday on the 4-hour, you can see that we do have the start of an upward trend right now on the 4-hour. We have the strong downward rotation. Here's a good example of a naked cross being taken out. We create the naked cross as we come up. 9 EMA crosses over the SMA. Price action leaves that cross alone, and then eventually we come back down where we closed it out right here. These crosses will very rarely get left alone. Our upward trend is still intact on the 4-hour. Going down to the 1-hour. Again, there's a perfect example of a naked cross being taken out. Here's the naked cross as we came down. Okay, 9 crosses over the 20. Price action moves away, leaves it naked, and then eventually, like we did yesterday, is we came back and closed it. I don't use them for entries. I use them for potential targets and areas to shoot for when I get signals that give me trade setups in their direction. Right now, we've got consolidation in the 1-hour, and we're just going sideways. No real trend, but we are trading below the 9 and the 20. So the 1-hour and the 4-hour is somewhat mixed. 30-minute, same thing. We've got a little bit of a downward trend, but it's more consolidation, but we are trading below the 9 and the 20. And then going down to the 15-minute, we do have slope and separation, but not very much slope, but we are trading below the 9 and the 20. And then the last but not least, the 5-minute, where we popped back up, and we had the news, and then the last 10 minutes we've gapped and popped back up, but the trend was down. We do have a naked, well, no, this isn't naked. This is a good example. I wanted to show this because somebody was asking me about this. You see how the cross is here, and then on the very next candle we went up and challenged it. So that is not a naked cross, whereas a lot of people would mistake that for a naked cross because it's basically right on this candle. But the cross actually happened just before. We do have some naked crosses below us. On the 15-minute, we have naked cross at 1941.25 and 1938.75. On the 1-hour, we have a naked cross at 1923.75, and on the daily, we have one at 1953.75. So we do have the majority of our crosses now below us. So I am expecting some challenge to the downside, especially if they raise the rates. But again, new information, new stimuli into the market can reevaluate this market very quickly. All right, so we have a breakout day yesterday. We've been in this value area, okay, between the 1976.75. Remember, 1976.75 was our key line in the sand for higher price discovery. We broke that late in the day, and we went up. Now, on the December contract, we got as high as 89. But remember, there's a 10-point spread between the December and the September, and I want to point this out. So I'm going to go back here and go to the September contract so you can see it. Now, the contract expired today, but if you want to go to the daily, remember that the 50% of the significant breakout candle, okay, which was the 21st of August, we had the 50% retracement at 95 and a quarter. We took that out on the September contract. The other one is back on August the 26th, I posted that inverted head and shoulder pattern with the primary target at the 61.8%. Extension of that head and shoulder pattern was 99 and a quarter. Well, I'm sorry, 98 and a quarter. We went up and we hit 99, plus the 61.8% retracement from this move from here down to here was 99 and a quarter, and we went right to 99, and so far we've rejected that. So the measured move is complete on the head and shoulder. There is the extended target, so I want to just take a quick look at that. Let me just bring it up here. So this was the inverted head and shoulder we were looking at. Our first target we got hit about a week ago, and then the secondary target, let me just make this a little bit bigger. You can see was at 98.33, so I call it 98 and a quarter. And then the extended target is all the way up at 20.33.32. So we still have a possibility of extension up here. I'm looking at this because I want to give myself areas of possible projection. Our ATR target right now, our range, I should say, is 50.91. We're currently trading 82.50. So we've got a low overnight. I know I'm all over the place right now, just bear with me. A low overnight of 1980 and a quarter so far. So 1980 and a quarter plus the 20-day ATR at 50.91. That takes us up to 2031.16, which is within our range today based on what our 20-day ATR target is. So, you know, that's significant. You know, we get any type of good news, and that head and shoulder extended target is within range of our 20-day ATR target. Now, the overnight high right now is 1988, and a 50-point move or ATR target to the downside is 1937, which is right near those two naked crosses that we have on the 15-minute at 1938.75 and 1941 and a quarter. So we have significant targets on both sides of where we're trading right now that, depending on what the Fed says, could take us down to those targets and beyond. I think that we could extend range. Anyway, I digress. We have had a breakout day. Our key line in the sand now is going to be below us at 76.75. I'm actually going to use, you know me, I'm always the conservative one. I'm going to take the more conservative of the lines or the trade zones. I'm going to be using the 75.50. Below 75.50, then I'll be looking for a price retracement down to the micro composite VPOC of this longer term, okay, value area at 69.75, and possibly continuation down to 65. And then, of course, if we get below there, we've got 60.55 with 57 as a possible spot where responsive buyers might. You've got the 57 and the 58 there as a value area low where they tried to hold value, and the value area high where they found value. So that two area is going to be important. 60 is going to be the target. If we get below the 48.75, then I think we're going to get those two naked crosses taken out down at 41 and a quarter and 38.75, and come back down to where we found balance, okay, in the last 6 days before we had the breakout candle. Everybody understand that? I know it's a lot to digest, but you got to put it in the thought process of potential targets based on auction logic, based on where we tried to hold value, where we're breaking out of value, where we're going into price discovery, and where we could come back into value and what those targets are. If we hold above the 76.75 and we get above the 88.25, of course, our first target is going to be 93.25. 99.25, and then above that, I think we have that target up to 2,250 when we the number I was just talking about earlier, and then possible extension up to the 0975, which is going to be our resistance, and anything above that, I'm looking for that 1150. But really up to the naked close here to close the gap finally up at 1550, and then the possibility of getting inside the other significant breakout candle of the 20th, and the high on this candle is 2055 75, and the low on it is 2015.25, and the 50% retracement of the second significant breakout candle is 2035.50, which is right there at our ATR target and our head and shoulder target, all right in that 2035.33 area. I'm just going to mark this on my Okay, so basically what we're doing is we're using auction logic and ranges and targets to give us an idea of the range above and below right now. Now, of course, if we get below that 37 20-day ATR target to the downside, then I'd be looking for a move down into this 21-22 area, 23 area that we've left behind and missed several times. We came close several times, but we left it alone, and then possibly come down all the way down into that 12, but I'd be looking at a move down to 1907. If the news is bad and they raise rates, I think we could blow through. My personal opinion is the fact that they're doing this Fed announcement on Thursday rather than Wednesday, coming into quad witching, means, and the fact that we had that retracement. Is my sound gone? Testing 1 2 3. Oh, okay. I'm just saying that some people are losing it, some people aren't. Anyway, my own personal opinion is that move down to that 1831 and retracement back up, this rally back up, coming into quad witching week and doing the Fed announcement late this time, it leads me to believe that they were prepping us for the possibility of a rate increase to gauge the market, and really we've just experienced a move down to 1831. So if we had a big wiggle, a 100-point move down from here, we're still above the 1831. So I think there's a good probability that they could raise rates. Now, the fly in the ointment is the possible Fed shutdown, okay? Or not the Fed, the government shutdown. And that generally revalues the market lower anyway, so it's hard to say. I think they're going to raise the rates, based on what we've seen so far. Anyway, let's go to our Globex. I know I'm running late and I'm kind of rambling. We're trading 82. Our overnight low is down here at 80.25. Our overnight high is up at 88. And our current Globex VPOC, doubt it's going to shift. It's at 82.50, basically right where we're trading. And we've got an LVN here and the midpoint and the VWAP at 84. So I want to mark that on my chart. All right, don't need this anymore. Take a look. Oh, no, that's the wrong one. All right, so how do we trade this today? Well, I think we've got this double distribution here, okay, from yesterday's RTH session. The problem is, look at it. I mean, really, look at it. It's ugly. This whole upper distribution, okay, is you get this whole blunt area and this area of, price rejection between the upper distributions. Actually got two distributions at 84.75 and 79.50. This is ugly. I think we're going to get stuck this morning chopping around in this area as they determine fair value, okay, in this upper distribution. I think it's going to be very, very, very difficult to try to, have an edge here. Really, the edge that you have is really not until you get up into this 87 or down to this 74, or you could try to use this 84 from overnight. But I think it's very dangerous. So being a conservative trader that I am, I'm going to be using the 74 down to the value area low here at 74 up to 75 as a trade zone. And I'm going to be using this 87, which is also just below this 88, which is our range high for overnight, as another trade zone. And I don't know if I'm going to take a trade inside, and that's a big range. Okay, that's basically a 13, 14 point range where I'm saying, where's my edge here? If I see a setup, such as a trade setup that I will take based on the current auction that comes into the market, I might take a trade, but I might not take any trades, okay, in this area, because where do you lean against? The only thing I can see that would even be a safe haven would be this 84, and it's questionable. So I think that my main hypothesis for this morning is we're going to test both sides of this range between this 84.75 and 79.50, with possible extension down to 74 and possible extension up to 88, maybe even 90. Above 90, above the 89, and I'm going to use 90 myself because I want to make sure that we're actually in the 90s. Then I think we get some move up into the 93. What did we say it was? 93.25. 93.25 with 95 just above it. Possible, areas of rejection at responsive seller stepping in at 99.50. I really don't want to be short or trying to get short until I see how they react off that 99.50. And then above the 99.50, 2002.50, 2004.75, 2009 changed to 9.75. Above that, 11.50, 15.50. There's a little bit of resistance here at 17.50. And then above that, 21, 24 and a quarter, should be 24 and a quarter. And then next area of possible resistance, 2750. And then above that, excuse me, we have the 3075. Come on. 3075, but again, as I've been mentioning, I'm watching the 31 as the ATR target. Actually, you know what? I'm going to change this to 31. Come on. And then we've got the 33 and the 35. I mean, basically, this is a cluster zone. Why are you doing this to me today? Come on. And then above that, we've got the 39.75. And I'm going high because of the fact that, you know, if we do get good news and they don't raise, you never know how high we're going to fly. 43.75, a big number above us, and then above that, you know, possible extension to that 70. I don't think we're going to get that high today. I've got it in there already, so I don't even have to do that. Now, well, we're inside of this. If we hold below 84, then I'd be looking for them to come down and take out the overnight low and the naked VPOC at 79.50. The only problem is I need something else that will give me an entry that I can lean against, because I really just can't lean against this 84 because it really doesn't give me any edge. Because you know, it could very easily come up to the 87, take out the naked close at 87.75, take out the overnight high, and then reject the range high from yesterday, and then come back down. So be very, very, very careful. This is going to be a real hard area to trade. You know, you could use the VWAP, you know, at 78.25, but again, I think you really have to risk down to the lower part of that distribution at 74, between 75 and 74. Below here, then it gets a little bit easier. Below here, then you want to be targeting the 72, the 70. You could even use the 69.75, but I'm going to front run it at 70. And then the 67 as your trade area with a target down at 65.25. And I'm putting it as a trade zone because I'll take the short into the 65.25, and then if it breaks there, I'll you know, be very aggressive and add into it, into the 57. I'm going to use 57. I'm sorry, you could use, I'm sorry, you're going to have a target here at 60. And then I'm going to use between the 57 and 58. Okay, I'm running along here. And then below there, 55. And then a key line in the support is going to be that 48.75. And below that, I'm targeting the 43, the 41.25, the 37 area, 37.25. And I'm going to move this target down here from 36, what was it, 33? $31.75, sorry, $31.75. All right, and then below that, 28.50, 25, and then the key number below here, the next big level down is the 23.21 down to 17. Below 17.50, the 12, and then our next key line in the sand, which is the 07 and a quarter, and below 07 and a quarter, we see the 1800s. And that'll be a big move this morning, but we'll deal with it if that happens in real time. Anyway, that's what I'm looking at in the ES. Sorry, I know we're about to open in about 6 minutes. I'm trying to get through all of this. I just have a tendency to have a lot to deal with, and we started late this morning. Keltner, center line, sitting up at that 83.84. Okay, that gives me something to lean against with the 24-hour VWAP at 84. And then if we don't get above there or move down to that 79 and a test of the 77 Keltner lower channel. Above there, a move up into that 85 area, which is the value area high from overnight or the 24-hour session, and possibly up to test the range high at 89.75, which will basically take us to testing the range high. Quick look at gold. Gold just trading in around this 18 level. We got as low as the 1470, and now we've popped back up. I was hoping it would come down a little bit further and I can get a second shot into this before the RTH session. Gold is a buy above 2230. I think it's a buy if it rejects 13 and continues back up, but if it gets below 13, then it's a short into 1106, 1105 area. And you know, above 23, look for them to come up and test this 26 and test this next level up here at 1130. Anyway, that's going to be it for the pre-market session. Sorry for being long and being all over the place, but there's a lot to cover on these days. Anyway, trade well, trade safe, and we'll catch you on the flip side.